Hello and welcome to Move Up with Mike at michaelglass.com. And we are putting a video together here to really talk about some keys to investing, and we're going to share some basic high probability trading strategies. Of course, with any investment video, we always want to talk about our disclosures. Any symbols you see today should not be inferred as a trader recommendation. Before you begin investing, whether it's stocks, forex, futures, or options, no matter what it is, there is a chance, a risk of loss. You can lose all of your money. So you want to make sure that you take the time to investigate and make sure that your risk tolerance, your financial literacy matches up with your investing before you put any money at risk. The strategies and essentially we're saying today are for informational purposes only. Future results are not guaranteed. We just want to again lay out what high probability trading is all about and give you a foundation for you to continue your investigation. Finally, any investment decision you make is solely your own responsibility. Trade at your own risk. I like to always start off my videos with a little famous quote or some type of cartoon. Today I chose a quote, and it simply says, "But deluded people don't realize that their own mind is the Buddha. They keep searching outside." And what I'm simply referring to here as we relate it to trading is that so many people look for the Holy Grail. They look for this magical trading system or indicator. They get on Google and they look for all this information. But in reality, the true path to being a successful investor is within yourself. You have to develop a trader's mindset. You have to have the mind to be a trader. It's not just as simple as looking at an indicator. If it was an indicator, if it was a specific setup, then everybody would be rich, everybody would be Warren Buffett, and we will all have happy lives. But we know it's not that system. We know that emotions truly sabotage most of our investing careers. That's why they say 90% of traders fail. Most of it have to do with the fact that we're not able to control our emotions. And so instead of looking outwards on how to be a better trader, a better investor, take the time to look inward and find out who you are as a trader. What style of trader are you? What market best fits who you are, both time-wise and personality-wise? Your money management, how much money do you have? Whatever strategy are you using, do it in line with how much money you have and how much risk you can afford to take. All the things add up to developing that trader's mindset, which will allow you to be consistent, focused, disciplined, and be a successful trader. So as we're just talking about high probability trading, this is the way that we can put the odds in our favor by leveling the playing field. You need to understand the market, time of day, support and resistance, economic releases. All this, you need to understand the framework of the market so that you make sure that you're not in trades at bad times. This allows us to put the odds in our favor. It allows us the ability so that we can discern and distinguish between high and low risk trades. And of course, there's nothing wrong with either one. There's nothing wrong with trading with the trend. There's nothing wrong with trading against the trend. But what's important is for you to know when you're doing that. There's nothing wrong with taking high risk trades. There's nothing wrong with taking low risk trades. But what is important is that you know when you're doing it. So high probability trading is about leveling the playing field, being able to frame the market, and be able to distinguish between high and low risk trades. So we're going to focus on 3 basic strategies that we believe fall in that category of high probability trading. Now, just trading breakouts, continuations, or pullback trades and looking for low volatility alone doesn't make it high probability. You still have to frame it with other conditions, other criteria, but it will allow us to begin that discussion of high probability trading. So what exactly is a breakout? There we go. Basically, what you want to do in a market is identify the swing high, swing low. In other words, identify support and resistance. This can be on a daily chart. It can be on an hourly chart, 15-minute chart, 5-minute chart, 1-minute chart. Again, who are you as a trader? Once you define that, then on that time frame, long-term, short-term, micro-term, you identify that support and resistance. and you let that market establish it. Make sure that it's firm, and then when price begins to break either support or resistance, in our example here, it's breaking resistance, that is a breakout. There's multiple ways to trade a breakout. You can trade just a breakout alone. You can trade a pullback of that breakout. We'll talk more about that later. But our first strategy that we're going to be sharing in our videos for the next 2 weeks are price levels of breakouts. Now, what about pullbacks? Well, we firmly believe that the trend is our friend, and so we want to look for places to enter trades where we have dual time frame agreement. In our picture here, we see a stock that's in a long-term uptrend. So when we get a shorter time frame pulling back and then reversing and continuing with the trade, that is our continuation trade. That is our pullback. It's going to resume that trend, so we want to find those situations so that we can take advantage. And again, let the trend be our friend. Finally, we're going to look for low volatility trades, and this is basically using an indicator called bollinger-bands. You notice that in our first strategy, breakout, second strategy, pullback, really no indicators were involved. And technically, you don't even really need to use an indicator for this low volatility, but it helps with you visually seeing with the Bollinger Bands. But basically what we're looking for is consolidation of price. Price moving sideways, not up, down, no trend. And you'll start to see the Bollinger Bands begin to squeeze, begin to pinch. And as the price begins to break, this is very similar to a breakout strategy. When it breaks above those bands, we have a trade. So this is our case study. For the next 2 weeks, I'm going to share my watch list of the breakout trades, the pullback trades, the low volatility trades, and Mark shared the price levels that I'll be looking to get into these trades. And at the end of the 2 weeks, we'll share what the potential results going to be. Again, this is just a case study to kind of show the voodoo of technical analysis, that there is some validity there. Keep in mind, when we're talking about price action and pullback, we're really not talking about anything but price action. No indicators are involved, but you don't really need indicators for low volatility. But we just wanted to share what really how technical analysis helps us identify high probability trading situations. Nothing is guaranteed. There's always risk. You can always lose money, but we can put the odds in our favor, just like poker, just like baseball, and put ourselves in situations to hit for singles, hit for doubles, hit for home runs, go all in, bust out our opponents, but more importantly, keep the odds in our favor, know what our calculations are, and have low risk trades. So I also want to take just a quick moment to understand that we are just talking about some real basic setups, and certainly I believe in keeping it simple, but we also want to make sure that we understand that there's much more involved in trading. Dr. Van Tharp had this great book, Trading Way to Financial Freedom, where he talks about 7 key components to a trading system. Setups, which is what we're talking about, breakout setups, pullback setups. Those are setups and entries, where we're identifying price levels to get entry and confirmation. Those are all just part of it. And this is also why some traders fail, because that's all they focus on. They don't focus on preserving capital. They don't focus on how to exit. They don't focus on opportunity costs, understanding your liabilities and what you have to keep in mind as far as bills. They don't keep in mind about how to position size, all in or just scaling in. And then your toolbox, newsletters, trading rooms, charting, whatever it may be, all those things are okay as long as you can discern and make decisions for yourself and you're not just following somebody else blindly. So I do want to keep a bigger scope here, understanding that what we're doing over the next 2 weeks is very basic. It's not 100% of how I'm saying people should trade, but it is, I hope, an exposure to what basic trading strategies can be identified, and how we can trade them by looking at past behavior and hoping that future price action will continue to show the same results. You can find us on Facebook, YouTube, and Twitter. We Move Up with Mike on YouTube and Twitter, and Are You Financially Literate is our page on Facebook. And we do want to throw out just another video for you. We got a free 5-part video course on high probability trading. As we talked about, it's really about framing the market. We talked a lot about framing the market in this video, and this has 5 separate videos on 5 areas that will help you frame the market. And then, what we firmly believe at michaelglass.com is that it's not about the indicator, it's not about the voodoo of technical analysis, or even high probability trading if you don't have the trader's mindset to pull the trigger. And that's what back testing, that's what documentation, and that's what practice virtual trading, our case study, helps you develop that trader's mindset where you can frame the market and follow a trading system, not just a setup, but a system, and be a consistent, profitable trader. Thanks, guys, and I look forward to talking with you over the next 2 weeks of our Move Up with Mike case study on the voodoo of technical analysis. Thanks, guys. See you next time.